You live in a world where every chart looks like a promise and every candle feels like a threat. A world where the market doesn't whisper, it roars. And in that noise, your decisions, your reactions, and your confidence rise and fall like the prices you're trying to control. Maybe you've wondered why trading feels harder than it should, why your emotions take over, why the same mistakes repeat themselves. It's not because you're not smart enough. It's not because you lack knowledge. It's because no one ever taught you how to protect the most important asset you have, your mind. Every trader talks about strategy. Few talk about psychology. Even fewer talk about the invisible force that ties the two together, your exposure to volatility. Today, you're going to see the market from a different perspective, a perspective that reveals why volatility hurts you emotionally and how a simple shift in your position sizing can change the way you think, feel, and act as a trader. This is not just about ATR. This is not just about numbers. This is about peace. This is about clarity. This is about becoming the type of trader who can stay calm in chaos, confident in uncertainty, and grounded in the truth of probability. Welcome to Mind Over Markets. Let's begin. You think your biggest problem as a trader is timing. You think it's your entry signals, your chart patterns, your indicators, or the market conditions you didn't expect. But deep down, if you're honest with yourself, you already know that's not the real issue. The real issue is the part you rarely want to confront: how much you expose yourself to the randomness of the market, how much you allow volatility to dictate your emotions, your reactions, and your decisions, and how quickly everything spirals out of control when your position size is misaligned with the environment you're trading in. The market doesn't punish your analysis. It punishes your position size. And the truth is, you've experienced this more times than you want to admit. You take a trade that looks good. The setup is clean. The trend is intact. Your conviction is high. But the moment the trade breathes against you, just a little, your stomach tightens. Your mind races. Every tick feels like a threat. And suddenly, you're not trading anymore. You're reacting. You're defending. You're hoping. You're praying. Why? Because the size of the position you're holding is too large relative to the volatility of the moment. You didn't misread the market. You misread your own capacity to tolerate the movement inside it. And this is the tragedy of retail traders everywhere. They think volatility is the enemy. But the real enemy is being oversized when volatility expands. And the most quietly destructive force in trading is believing you can handle it. You can't. Nobody can. What you can handle, and what the best traders in the world have mastered, is making sure your position size adjusts to volatility before volatility adjusts your perception of risk. And that is why you're here right now. Because you know you can't build emotional stability with emotional guesswork. You can't build risk management with hope. You can't build confidence with oversized trades. And you can't build longevity without learning how to size your positions in a way that protects your psychology as much as your capital. Today, you're going to discover how something as simple as ATR average true range can become the psychological anchor that stabilizes your trading, your emotions, and your long-term growth. Not because ATR predicts the market, it doesn't, but because ATR predicts something far more important: how you will react when the market expands or contracts. When volatility increases, ATR rises. When volatility calms, ATR falls. ATR isn't about the future. It's about the environment you're walking into. And every decision you make in trading is shaped by that environment, whether you realize it or not. If you learn to size your positions based on volatility, you neutralize the emotional impact of market fluctuations. You reduce fear. You reduce greed. You reduce panic. And most importantly, you reduce the impulse to override your plan. So let's begin at the root of the problem you've been facing for years. You don't get crushed because you're wrong. You get crushed because you're too wrong for the size you're holding. And volatility magnifies mistakes far more than it magnifies skill. Think about your last painful trade, the one that kept you awake, the one that made you question yourself, the one that made you feel like the market was hunting you. Was the problem really the direction, or was the problem that your size was so large that every small fluctuation felt like a personal attack? Imagine for a moment that your position size was half of what it was, or a third, or sized according to the volatility of that specific day using ATR. Would you have been afraid? Probably not. Would you have panicked? Unlikely. Would you have sabotaged yourself? Almost certainly not. Your emotions didn't spike because your analysis was wrong. They spiked because your position was oversized relative to the volatility the market threw at you. You weren't emotionally unstable. You were volatility exposed. There is a difference. People talk about mindset as if it's something you meditate your way into or something you journal your way into. But mindset isn't something you practice. Mindset emerges from structure, from process, from frameworks that prevent you from being exposed to randomness in ways your nervous system can't handle. The market stresses you out not because it's unpredictable, but because you've positioned yourself in a way that magnifies that unpredictability. And that is where ATR comes in. ATR isn't magic. It doesn't give you an edge by predicting price. It gives you an edge by predicting your tolerance. ATR tells you how wide the market is breathing, how violent its movements are, how much space it needs, how much room your trade must be able to survive. When you size your positions using ATR, you stop treating every market condition the same. You recognize that a quiet market and a wild market demand different levels of exposure. You stop guessing the right lot size and start aligning your exposure with the environment. And this one shift, more than anything else, stabilizes your psychology. You can't control your emotions when your risk is unknowingly oversized. But when risk becomes consistent and volatility adjusted, your emotions have nothing to fight against. Suddenly you're calm, objective, rational, present, in control. You'd be surprised how peaceful trading becomes when your position size reflects the true nature of the market you're in. Let's go deeper. Every trader entering a volatile market with a fixed position size is making a silent assumption that their emotional threshold is constant. But your emotional threshold isn't fixed. It expands when volatility is low and collapses when volatility is high, which means the only rational solution is to adjust your exposure dynamically. ATR allows you to do this effortlessly. ATR tells you how big the battlefield is today, how loud the noise is, how aggressive the swings are. And when you listen to ATR, you size your positions in a way that protects your psychological capital as much as your financial capital. Imagine walking into a storm with armor that adjusts to the wind pressure. That's what ATR-based sizing does for you. It protects you before you even know you need protection. When ATR is low, the market is quiet. Your stops are tighter. Your size can be slightly larger because price isn't swinging wildly. When ATR is high, the market is loud. Your stops are wider. Your size automatically shrinks, ensuring you can breathe while the market thrashes around you. This isn't just risk management, it's emotional management. And your emotions drive your decisions far more than your strategy does. Let's talk about fear. Fear in trading doesn't come from losing. Fear comes from the inability to quantify how much you can lose. When you don't know the true risk of your position in a volatile environment, every candle becomes a threat. Every pullback becomes a danger. Every wick feels like it's targeting you personally. ATR eliminates that fear because it quantifies volatility. It tells you the expected range. It gives your nervous system a boundary. It lets you know what normal movement looks like for the environment you're in. When your brain knows the boundary, it relaxes. It doesn't panic when price pulls back within that range. It doesn't overreact. It doesn't feel attacked. It stays grounded and aware. Fear thrives in ambiguity. ATR kills ambiguity. Now let's talk about greed. Greed thrives when the market is quiet. When volatility compresses, traders feel safe. They double size. They take on more risk. They convince themselves that the market owes them money. But here's where traders sabotage themselves. When volatility expands unexpectedly, their oversized positions explode. Greed is the illusion that calm markets will stay calm. ATR shows you objectively whether the calm is real or deceptive. Without ATR, you're guessing. With ATR, you're aligned. There's another psychological pattern. ATR solves revenge trading. Revenge trading comes from pain. Pain comes from large losses. Large losses come from oversized positions relative to the volatility at the moment you entered. When you size properly, your losses are controlled, predictable, expected. There's nothing to revenge. The emotional fire doesn't ignite in the first place. For the first time in your life, you stop fighting the market because the market stops hurting you in ways that trigger emotional retaliation. Overtrading also fades away because when your risk is controlled, you don't feel the need to compensate emotionally. You trade your system. You stop chasing. You stop forcing. You stop reacting. You start choosing. Can you see the psychological power here? Volatility-adjusted sizing is not a technique. It's not an indicator trick. It's not a hack. It's a psychological foundation. It's a way of ensuring that you position yourself in the market in a manner that your nervous system can tolerate. Many traders think they have psychological problems, but what they really have is a sizing problem. Their mind isn't broken. Their position size is. You can't meditate your way out of a 20-lot trade in a market that's swinging 80 pips every hour. You can't breathe your way through a position that doubles your account risk because volatility spiked. You can't cold shower your way out of an oversized position that wipes out a week of profits in minutes. But you can prevent all of this with a single principle: adjust your size to volatility. Let's dig deeper into the psychological transformation that happens when you adopt ATR sizing. You become more confident, not because you're winning more, but because you're losing less in chaotic environments. Confidence doesn't come from profits. It comes from consistency. And consistency is impossible when your exposure is unpredictable. You become more patient. Because when your size is controlled, you don't feel pressure. You don't need the market to hurry. You don't need trades to work immediately. You don't feel desperate. You become more objective because you're no longer emotionally entangled with the outcome of every candle. You can observe the market instead of being owned by it. You become more disciplined because discipline is easy when emotions are stable. Discipline is almost impossible when emotions are amplified by bad sizing. You become more resilient because your losses are small, your wins are clean, your equity curve becomes smoother, and every smooth curve strengthens your belief in your system. Your entire experience of trading shifts. The noise inside your mind quiets. The need to predict disappears. The rush to act fades. The panic subsides. For the first time, you feel like you're playing the game the way it was meant to be played. You become a risk manager first, a trader second. And this is the hallmark of every consistently profitable trader in the world. Now let's talk about the simple practical core that makes volatility-adjusted sizing accessible to anyone. You take the amount you're willing to risk per trade. Maybe 1%, maybe 0.5%. Something small enough that you respect it, but not so large that it distorts your mind. Then you divide that risk. by the ATR of the instrument you're trading. This tells you how much room the market typically needs. You multiply that ATR by a factor maybe 1.5, maybe 2, to give your stop loss breathing room. And suddenly your position size emerges naturally. You're no longer guessing, you're aligning. You're matching your exposure to the reality of the environment. When volatility rises, ATR rises. Your position size shrinks automatically, and the psychological burden shrinks with it. When volatility falls, ATR falls, your position size grows safely, and your confidence grows with it. This is how professionals think. They don't impose their will on the market. They adjust to it. They respect its rhythm. They respect its tempo. They respect its intensity. And because they respect the market doesn't punish them emotionally. Imagine waking up tomorrow and taking a trade where your size is perfectly calibrated. Imagine watching the market fluctuate and feeling nothing but calm awareness. Imagine having a stop loss that aligns with the reality of volatility instead of your emotional preferences. Imagine holding a trade without gripping your chair. Imagine closing a loss without psychological scarring. This isn't fantasy. This is what happens when you align size with volatility. Let's talk about two traders, Trader A and Trader B. Trader A ignores volatility. He uses the same lot size every day. On calm days, he feels strong. On volatile days, he gets crushed. His emotions swing with the market. His confidence evaporates. His mistakes multiply. He doesn't understand why he keeps sabotaging himself. Trader B uses ATR sizing. Every trade is adjusted. Every position is safe. When volatility spikes, his size shrinks. When volatility compresses, his size expands. He's never too exposed. He's never overwhelmed. He's never emotionally hijacked. Trader A loses because he treats every environment the same. Trader B wins because he adapts. Which one do you want to be? Let's go even deeper into why ATR works psychologically. ATR gives you consistency, not consistency in outcome, but consistency in exposure. Every trade feels the same. Every risk feels the same. Every movement feels familiar. Your brain loves that. Humans crave consistency. We crave predictability. When your emotional brain knows that your worst-case scenario is always controlled, it becomes silent. ATR gives you permission to let the market breathe. You stop expecting price to move in straight lines. You stop panicking at normal fluctuations. You stop thinking the market is targeting you. ATR gives you control over the only thing that truly matters, your downside. Skill grows slowly. Volatility grows suddenly. And ATR protects you from sudden volatility while your skill continues to grow slowly and steadily. Think of your trading journey up to now. Think of the best trades you've ever taken. Think of the worst. The difference wasn't intelligence. It was emotional stability. It was exposure. It was size. It was volatility. The market is not your enemy. The market is a natural force, and natural forces are dangerous only when you expose yourself to them recklessly. The ocean is peaceful when you respect its waves, but if you walk into the ocean during a storm, no amount of confidence will protect you. ATR is the tool that tells you how big the waves are before you step in. Let me tell you something you may not want to hear. You're not losing because you lack knowledge. You're losing because you lack alignment. You're not losing because of your strategy. You're losing because of your sizing. You're not losing because your psychology is weak. You're losing because your exposure is erratic. Once your size stabilizes, your mind stabilizes. Once your mind stabilizes, your decisions stabilize. Once your decisions stabilize, your results stabilize. Volatility-adjusted sizing isn't about making more money. It's about making better decisions. And better decisions lead to better outcomes automatically. This simple principle, ATR-based sizing sits at the intersection of mathematics and psychology. It bridges the external chaos of the market with the internal calm you need to trade well. It reduces friction. It reduces overreaction. It reduces emotional turbulence. For the first time, you start treating volatility not as an enemy, but as information. Information that protects you. Information that warns you. Information that guides you. You stop forcing the market to give you what you want, and you start letting the market tell you how much you should risk. This is maturity. This is discipline. This is trading. You can keep asking the market for certainty, or you can build certainty within yourself. ATR helps you do that. Volatility-adjusted sizing helps you do that. So the next time you take a trade, don't ask yourself if the setup is good. Ask yourself if your size matches the environment. Ask yourself if your exposure reflects your emotional capacity. Ask yourself if you're respecting the volatility of the moment, because the market doesn't care if you're confident. It cares if you're aligned. And when alignment happens, everything changes. You breathe easier. You stay calm longer. You see the chart more clearly. You stop reacting. You start choosing. And in those choices, your trading identity transforms. You become someone who is not tossed around by volatility, but guided by it. Someone who doesn't fear uncertainty, but adapts to it. Someone who doesn't chase trades, but positions themselves properly for every potential outcome. Your power as a trader comes from your ability to stay present, and you can only stay present when your risk is under control. If you take one thing from everything you've heard today, let it be this: volatility doesn't destroy traders. Oversized positions do. ATR doesn't predict the future. It protects you from the present. And sizing isn't about making more money. It's about preserving the mind that makes the money. You work hard to understand the market. Now learn to understand yourself. And let ATR help you build the emotional foundation that trading mastery requires. Because in the end, your edge is not your system. Your edge is not your strategy. Your edge is the version of you that emerges when your emotions are stable and your exposure is aligned. And that version of you is waiting on the other side of one simple shift: volatility-adjusted sizing with ATR. When you size your positions to volatility, you free yourself from emotional turbulence. You finally become the trader who can think clearly, the trader who can follow a plan, the trader who can stay calm in chaos, the trader who no longer fears the market because the market no longer threatens him. This is how you evolve. This is how you grow. This is how you build a career that lasts. Your mindset will not save you from bad sizing, but good sizing will save your mindset. And when your mindset is protected, everything else falls into place. Your discipline strengthens. Your confidence grows. Your judgment sharpens. Your patience expands. You can't control the market, but you can control your exposure to it. And that is enough. You can't eliminate volatility, but you can adjust to it. And that is everything. You can't predict the future, but you can construct a present that protects you from the worst of it. ATR sizing is not about being perfect. It's about being prepared for the swings, prepared for the spikes, prepared for the unexpected, prepared for the reality of the environment you're stepping into. And when you're prepared, fear fades, greed fades, FOMO fades, revenge fades, stress fades, clarity rises, discipline rises, confidence rises. ATR is not just a tool, it is a psychological anchor. And volatility-adjusted sizing is not just a technique, it is a way of thinking, a way of trading, a way of navigating uncertainty with strength instead of anxiety. So from this moment forward, let volatility guide your size. Let ATR guide your exposure. Let structure guide your emotions. And let your emotions finally become quiet enough for your wisdom to speak. This is the path to mastering the markets. This is the path to mastering yourself. This is mind over markets. If you've listened this far, then something inside you is changing. You're beginning to understand that trading isn't a battle against the market. It's a conversation with yourself, a conversation about fear, about greed, about exposure, about what you can control and what you must let go of. Volatility will always be there. Uncertainty will always be there. The market will always move in ways that test your patience and shake your assumptions. But now you have a way to walk through that uncertainty without being consumed by it. You have a framework that protects your mind before it protects your money. When you size your positions according to volatility, you're not just managing risk, you're managing identity. You're shaping the version of yourself who can survive, adapt, and grow. The version of yourself who can trade without panic, without desperation, without emotional chaos. So take what you've learned today, apply it, live it. Let volatility guide your size. Let ATR guide your decisions. And let discipline guide the trader you're becoming. Remember, your edge is not prediction. Your edge is emotional stability. Your edge is the calm you carry into every trade. This is your path. This is your evolution. This is mind over markets.